Hey everybody, it's Alex here, aka YaBonks, and on today's episode of the YaBonks Show, I have a very special guest with me today. I have Stu from Flex Perpetuals with me today, and Flex Perpetuals is a next generation derivatives trading platform on the Base blockchain. Stu, do you want to say hi to the audience and introduce yourself?
Yeah. Hi, everybody. Hi, Alex. Great to be here. Thank you for having us. My name's Crypto Stu. I've been in the DeFi space for the last 3 years or so, primarily as an investor, but I've been involved quite heavily in several projects over the course of the last 2 years or so. I've built several tools that the DeFi community has found particularly useful for some of these projects that I've been working for. And I'm now the Chief Operating Officer for Flex Perpetuals, and really excited to come on the show here today and let you, give you a bit of a debrief on what exactly Flex Perpetuals actually is.
Well, thank you so much for coming on the show today. I'm excited to jump into everything about Flex Perpetuals. It's extremely interesting. So for those who don't know, do you want to give an overview or an elevator pitch for Flex Perpetuals?
Yeah, absolutely. So Flex Perpetuals, we're building a decentralized perpetuals exchange on the base chain. So essentially a platform that allows traders to come on and speculate on the markets using leverage in a decentralized manner. So they retain custody of their assets. There's no KYC or anything like that. So what we're building is what we believe to be the next generation of perp dexes, and we're bringing that to the base chain, which we feel is, one of the most exciting chains for this year, next year, and beyond. And not only are we catering for traders, but there's opportunities for those that perhaps want a more passive investment style with providing liquidity as well.
Very, very exciting stuff. Now, before we jump into all of the details about why Flex Perpetuals is so cool, do you want to let the audience know about any important dates or announcements that they should know about right now?
Yeah, absolutely. So this is really good timing, actually, Alex, because we've got some really exciting stuff happening at the moment and coming up imminently. So we are in the middle of our token generation event, which essentially is a public raise. So you've got the opportunity to get in at the earliest possible opportunity to Flex Perpetuals. You'll get the best possible price for your FDX tokens, which is our native token in the ecosystem. And that raise is currently ongoing. We opened that up just a few days ago, and that will continue for the duration that our testnet is live, and until we reach our cap, which is 575 ETH. So I think we're about 15% of the way there on that raise at the moment. So now is a really good time to get in as an investor. And then additional to that, we're really excited because we have our testnet, which is going to be launching later this week at the time of recording. So hopefully Wednesday or Thursday of this week, we'll be launching our testnet. And to celebrate that, and also to encourage people to come in and use the platform and experience the platform, we're doing a $5,000 demo trading contest. So there's the opportunity to win big cash without actually risking any of your own money.
Well, that's awesome. I love stuff like that. So if I understood you correctly, right now you're doing your token generation event. So essentially, it's the earliest possible time for people to get in and get the FDX tokens and at the best possible price. And then on Wednesday or Thursday, September 4th or 5th, the testnet should be launching along with a demo trading competition where demo traders on the testnet could win up to $5,000 in stable coins. Is that correct?
Absolutely, yeah. And we'll when we release testnet, we'll share the exact details of what the rules are for that trading competition. So we want to make sure that it's fair for everyone. So you can't just come in and mint an unlimited amount of ETH on the testnet. There's going to be specific rules and parameters you need to follow. But yeah, absolutely. $5,000 USDC on base chain up for grabs for essentially the most profitable demo trader during the testnet environment.
All right, you guys heard it. All of you traders out there, there's $5,000 up for grabs with no risk. You just go into the testnet and you trade on a demo account. And if you do the best, you can win up to $5,000 cash. Where can they find more information about that?
So the best place at the moment to get in touch with us and to keep in contact with what's going on in the project is our Telegram. So that will be in the description of the video here. We're also really active on Twitter or X. So those are the two best channels to keep up to speed with what's happening in Flex.
Awesome. So go join their Telegram channel and go follow them on X or Twitter to find out all of the important updates about the testnet launch, the token generation event, as well as the $5,000 testnet demo competition, which is super cool. And I also saw over the past couple of weeks or months, you guys have done a ton of giveaways to your community as well. So if you guys like giveaways and fun stuff like that, go check out Flex Perpetuals. They're doing it big right now. All right, now.
Yeah.
Go ahead.
I was just going to say we do giveaways almost every single day. We're giving out stable coins on a regular basis. Our CEO is a trader, so when he has a good winning trade, he tends to give some of those profits away to keep the engagement up.
That is awesome. I love that. So let's jump right into it. So my first question, which is I think the most important one here, because that's why we're all here today, is how do we make money in Flex Perpetuals? What's in it for me? How do I make money here, Stu?
Yeah, absolutely. So that's what everyone wants to know, isn't it?
Yeah.
Yeah. Ultimately, there's a couple of different ways. So depends on what type of investor you are. So if you're a trader, then naturally by using our platform, you're using our platform to execute your trades, and you're in control of your profit and loss based on your competency as a trader, I suppose. Additional to that is we are incentivizing traders to trade on our platform. So you won't only benefit from your own P&L, but you'll receive, we're doing a point system. So the more volume that you trade on our platform, the more you will be rewarded in airdrops to help compensate you for trading fees and ultimately just to make it a more profitable experience as a trader on Flex Perpetuals. So that's as a trader. And then there's liquidity providers. So once we launch, you'll have the ability to provide liquidity in our market making LP, and that market making LP will take a share of the revenue that the platform makes. And just to kind of put things in perspective, so the really big perp dexes out there at the moment, so GMXs, the DYDXs, they're looking at around about 100 million in revenue for the last year. The smaller perp dexes, even the smaller ones, the likes of HMX, which is kind of a mid-sized perp dex, 13 million in revenue last year. And so that's really our first year's goal, is to try and emulate the success of HMX. And all that revenue is going to be getting shared amongst people who are providing LP on our platform via the market making liquidity pool, and also just by providing liquidity for our native token. So yield is one way to earn, and trading is another way to earn. And then obviously we've mentioned the TGE, or the token generation event, and that gives you probably the best opportunity for a risk to reward on your investment, because you're going to be getting in at the best price for the token, and then all the yield that you earn over and above that, on those FDX tokens will be significantly higher as the token price appreciates.
I see. So there are three main ways, if I understood you correctly, to earn with Flex Perpetuals. We can make money as traders using the trading platform, the leverage. We can trade derivatives on multiple commodities, all that good stuff as traders. We can also earn airdrops as traders with open positions on the platform. Is that right?
Yeah, the more volume that you trade, the bigger your rewards will be.
Very cool. So earn to trade, or like trade to earn, I guess you would call it. And so that's cool. And then another way is through yield as a liquidity provider or staker here. I love liquidity farming. So if I find a good opportunity, especially on a new platform or exchange where the yields generally start off really high, I love liquidity providing. If I know the team and I have a high level of trust, I will oftentimes liquidity farm in multiple different exchanges on multiple different chains to diversify my risk, of course. And so cool, liquidity providing. And the liquidity providing opportunity here, there are so many multiple facets to it that we will break down, but it's pretty wild. From the documentation and what we've talked about, Flex Perpetuals gives back 90% of the revenue to stakers, to investors here, and people who are lending their liquidity. So that's a really high amount, by the way. I think most platforms only do 30 or 40% revenue back to liquidity providers and stakers. You guys are doing 90%. So that's huge. And especially if your numbers get anywhere close to even one of the smaller derivatives trading platforms like HMX, that's a lot of money. So that's the second way, liquidity providing. And the third way is the token generation event, which potentially has the highest upside in a shorter time frame. Because if my research is correct, when the HMX platform did their token generation event over on Arbitrum, I believe, they did a 20x from their token generation event pre-sale price. So the pre-salers and people who bought their TGE did about a 20x, and I think even today it's at a 14x from where it launched, or from where that pre-sale price was. So that is potentially the biggest opportunity here right now. And you said on top of that, with the token generation event, I'm guessing there's a vesting schedule or things like that, but you actually can earn on those tokens, on the FDX tokens from the TGE as you're receiving them as well. So three main ways: trading, liquidity providing, and pre-sale / token generation event. Did I say all that back to you correctly?
Yeah, pretty much. There's a couple of things I'll just elaborate on there a little bit. So
sure.
We have finished our seed round. So the seed round was wrapped up about 2 weeks ago, and we raised $700,000 in the seed round. One of the things that I really want to highlight is that this is a community-driven project. So we haven't gone out to venture capital. We raised that 700,000 purely from our existing community. And we have a project already on Arbitrum. We've got lots of loyal investors from that project, and a good chunk of that 700,000 that we raised for the seed round has come from those investors. So I think the largest deposit in that 700,000 is $35,000.
Wow.
So, and that's significant for anyone that is thinking about getting involved in the token generation event. You don't have a big VC who's ready to dump all their tokens as soon as they see a appreciation in the asset. So that's really important. The the figures that you were quoting from HMX, that was in relation to their seed round investors. Their TGE, I think, went up 7x from the token generation event. And
okay.
yeah. So what I think people need to understand is if you invest $10,000 in the TGE, just as an example, and then the token price does a 7x, then your tokens are worth $70,000 at that point. And but you're earning yield based on that dollar value. So yield on cost is a really important thing to get your head around, because it's going to mean, say the APR is 50%, you're now earning 50% APR on $70,000, not 50% APR on $10,000. And this is why the early investors in HMX were able to get a return on their investment literally within the first 3 months of the platform launching. And then they still had all their tokens. And so for our TGE investors, there isn't actually any vesting periods. Your tokens will be fully liquid at launch.
Okay.
The seed round investors who have already invested, they're subject to vesting and lockup periods, but the TGE investors aren't. So it's a really good risk to reward opportunity in the moment.
Okay, good to know. So the private sale seed round investors, they have a vesting schedule, but the token generation event, they receive the tokens right away when the token is launched.
Yeah.
Amazing. All right, great to know. And you, the viewer, can find all of the details about the private sale and the token generation event and how all that breaks down in their documentation. Their documentation is very, very thorough. So go check out all of this, and also check out their Medium articles. Those are very, very detailed as well. You can see how all of this breaks down, and also their FTX token allocation. So like you were saying, the seed round has a 6-month cliff and an 18-month overall vesting period. And the TGE, the token generation event that is going on right now, the vesting is immediate. So right when the token launches, you get all the tokens that you are allocated in the token generation event. So
yeah,
check that out. They're very thorough in their documentation, which I love, because I want to know what's going on with my money. You know what I'm saying?
100%. And with the token generation event, so when your tokens become available to you, which will happen as soon as the token is launched, you've got a couple of options at that stage. So you can either just hold on to those tokens and then sell them when you feel as if you've realized enough of a profit, or you can pair those tokens with ETH and stake them on the platform as liquidity to earn revenue share. Or you can stake them on Aerodrome Finance, which is Base Chain's largest decentralized exchange, and you can earn Aero rewards, which we will be incentivizing through our own protocols ownership of locked Aero tokens.
Got it. Okay, so once you get your FTX tokens, you can do a lot with it, including pairing it with Ethereum and staking it over on Aerodrome and getting all sorts of additional emissions and rewards like Aerodrome bribes and things like that as well.
Absolutely.
Okay, great. Yeah, check out the documentation. It is amazing here. So there are so many different ways that you can earn as a liquidity provider, as a staker, and like liquidity providing, you earn from counter trading, from people, they're making trades as a liquidity provider. You're technically providing the counter trade to it, and you get the revenue from that as well. Anyway, let's jump into all this. Okay, so this is a super advanced, and this is why you guys call it a next generation trading platform. What makes this better than all the other derivatives trading platforms out there on the base chain right now?
Yeah, I mean, great question. So I think there's a few things that are involved and why we feel as if we have a bit of an edge over the competition. So we've mentioned HMX a few times, and one of the reasons for that is we have partnered with HMX. So HMX launched in the middle of 2023 on the Aerodrome network, and over the course of the last year, they've done just under 50 billion in volume on the Aerodrome network. Wow. So they actually launched with several innovations on the PerpDex model that was originally given to us through the likes of GMX. So GMX came first, then HMX made some what they felt to be improvements on the GMX model. Things like being able to have your collateral is cross margin, so you don't have to have specific collateral for each position that you're holding. So it's a much more efficient process for traders. They also came up with some really unique innovations in how their market making liquidity pool was managed and the risk mechanisms that are in place for that. And so we are actually bringing HMX's technology onto the base chain. So it's a battle-tested platform that has been working seamlessly on Aerodrome that we are now bringing onto the base chain. So the tech is proven and the tech works, and that's going to be a great foundation for us to start with, and then we can build on top of that to make it our own. So we're starting with a working product. We're not trying to launch with an unproven model, if you like. And so a lot of the early risk that's associated with new projects is mitigated because of that. Then what makes us different to our competition on the base chain, there's a few different features. So one of them is the revenue distribution that you've already mentioned. So we are there's 90% of the protocol revenue is being used to support the investors in the ecosystem. And that's a combination of revenue for our market making liquidity pool stakers, revenue for our native token liquidity stakers, and then buybacks and deepening of protocol owned liquidity to help protect or make the FDX token a more resilient token with deep liquidity. One of the things that we are really trying to emphasize as a protocol is protocol owned liquidity, because it's all very well when you've got a new project and there's momentum behind that launch and you see the token price going up and up and up. But if the liquidity isn't there, it just crashes hard as soon as people start taking profit or as soon as people start selling. So the fact that we've got this emphasis on depth of liquidity, along with the fact that we don't have any significant whales in the ecosystem, means that we're confident in the long-term performance of the token, which is a good thing for anyone that's invested in the platform, because it's going to mean that your yield is being calculated off a higher value of your holding. So there's that. We're also introducing something called dynamic emissions distribution. So this is something that we haven't seen any other protocols doing so far. There are other protocols who incentivize trading volume by offering a points-based system, like we mentioned earlier on. But they have, in their tokenomics documents, you can see that they have this arbitrary scheduled amount that they're going to give out as airdrops every single month. And what we are doing is we're modifying that principle. We still want to incentivize traders, because volume is the lifeblood of any exchange. So we need that volume. but we want to incentivize traders based on the volume that they bring. So the dynamic emissions means that when volume in the platform overall is high, we will be emitting more. And then when volume drops off, we will scale that back. So we're not just giving out unnecessary tokens that can damage our price long term. So the dynamic emissions, the HMX partnership that we've got, the deep protocol own liquidity, and then finally the last innovation, which I think is possibly one of the most significant, is the Aerodrome partnership that you can see there on the screen at the moment. So we are going to be hosting our native tokens liquidity on Aerodrome Finance. Aerodrome is the largest decentralized exchange on the base chain. And we, as a protocol, and part of the money that was raised during the seed round was used to build a position in locked Aero tokens ourselves. And I think we're at the moment, although we haven't even launched yet, we're number 26 on the Aero token holders list. So we're aiming just to keep building our position there, because what that position does is it gives us the opportunity to consistently incentivize the liquidity on Aerodrome Finance. So if you're familiar with protocols like overnight finance, and if you have a look at the overnight token, the thing has been steady as a rock over the last 120 days. And that's because they have implemented this Aerodrome flywheel. So the Aerodrome element is another difference than what other perp dexes on base chain are doing at the moment. And ultimately, all of this is going to help deepen our liquidity, because it's kind of a virtuous cycle with these perp dexes. So we need volume, because the volume generates fees for the platform and its investors. But we also need liquidity providers to be able to facilitate that volume. And so by incentivizing volume, we inadvertently incentivize people to come in and provide liquidity, because the more volume means more fees, which means the APRs for our liquidity providers are going to be much higher. And then that means that we can actually handle more volume. So yeah, that graphic there explains that virtuous cycle.
Yes. And that makes sense. This is when you really think through what is going to be the impetus for a platform like this to grow and scale. It's exactly here. You want to drive as much volume as possible. How do you attract that volume? There are multiple ways, but generally you want to have more revenue to give back to investors, stakers, liquidity providers. And so they're going to get bigger APRs, they're going to get bigger returns on the money they have staked. And then that means you're going to have more liquidity. So as they're staking more and more liquidity into the platform is going to be able to facilitate larger trading volumes and bigger trades with less slippage, less issues, less risk for traders, and more stability for the liquidity, for the FTX token price. And as that token price keeps going up, people are seeing it on the charts, bigger market cap, higher price increases. More people are going to see that. That's going to drive more trading volume, and then the cycle continues. So this is a really great graphic here for anybody in DeFi to understand how something like this can essentially bootstrap itself through well thought out incentives for traders and liquidity providers.
Yeah, and you're familiar with liquidity pools, YaBonks, and how they work. So one of the really cool features with this Aerodrome liquidity is that it adds a layer of gamification to our platform. because people will have a choice. They can either stake their FDX ETH LP on our platform and they'll earn revenue share, or they can stake it on Aerodrome to earn the rewards that we're incentivizing through our holding of Aero tokens. So what that essentially is doing is it's reducing the amount of TVL in each of these two liquidity pools. And if you know how LPs work, it's the total volume, and the fees in that pool is divided amongst the TVL that's in that pool. Right. So what this means is we're actually able to increase the APRs in both of those pools because there's going to be half the amount of TVL in them. And so this means that you as an investor can essentially move from one to the other depending on where the APRs are highest.
That's really clever to split up the staking opportunities and lessen the TVL, because I, as a YouTuber and a community, as somebody who runs a large community in the DeFi and crypto space, as soon as I mention a liquidity pool that I'm in, I immediately dilute myself out of profit. It's no longer worth my risk reward ratio and I have to exit that position. So it's tricky because I want to share my positions with people as I find good, juicy staking pools and liquidity opportunities, liquidity providing opportunities. But as soon as I do, the TVLs on those liquidity providing staking pools goes very high, and the APRs then get divided amongst the entire TVL. So all of a sudden I go from earning potentially 1% to 3% per day for a period of time to quickly I'm down to like 0.1 to 0.3% per day. And then I move on. So that's very cool. You've come up with a way to mitigate some of that dilution factor by splitting this into essentially two liquidity providing opportunities based on not only Flex Perpetuals, FDX, and your own trading and liquidity providing incentives and rewards, but also utilizing Aerodrome Finance's reward incentive structure with your very large Aerodrome position that you guys have acquired. So that way people can diversify and they can provide protocol-owned liquidity to Flex Perpetuals on the Aerodrome Finance platform and receive the Aerodrome rewards, emissions, bribes, all that stuff, and a portion of their trading fees. While also you're getting trading fees in the other liquidity providing opportunities on the Flex Perpetual side. You're getting now the trading fees from traders on the derivatives trading platform, not just the Aerodrome decentralized exchange swap fees and liquidity provider fees over there. But now over here, you're getting exposure to all the Flex Perpetuals, revenue share, airdrops, emissions, and incentives. So yeah, you've really split this apart into two ways to really take the same amount of TVL, split it up into two opportunities that receive rewards from two separate platforms. And as a liquidity provider myself, that should hopefully allow me to maintain a higher APR than if you guys had just relegated all of this to one giant pool somewhere. Is my thinking correct there?
Yeah, 100%. And that was a key part of the decision that we had on what chain we were going to be launching on was this opportunity with Aerodrome, because we were watching other protocols doing something similar, but no perpetuals exchanges are running a model like this. So this is bringing a new flavor to that PerpDex model. And I think it'll be really interesting to see, because if I'm staking on our platform and I'm getting 50% APR, and then I look and I see that I could be staking the same on Aerodrome and get 70% APR, then I'm going to move. But when I move, I take my TVL with me, which automatically increases the APRs of the pool that I've just left. So it adds this, quite exciting element for those that like to provide liquidity to be able to chase the highest yields.
And that is something I actively do week to week, is I'm, reallocating my liquidity positions to basically chase the highest APRs in my trusted basket of liquidity providing opportunities. So that's a fun element you've added here as a liquidity provider. That's going to be a lot of fun and also hopefully very lucrative. All right, so you've got the HMX partnership, which is huge. You've got the Aerodrome finance position and partnership, which is huge. Speaking of the HMX, while we're touching on that, so have you guys essentially used the HMS contracts here? Because you said you're using vetted, community vetted technology. So are you guys using the HMS contracts and repurposed for the base chain? And if so, are those contracts audited?
Yeah, 100%. So we're bringing their code base onto the base chain, and HMX have had several audits done on their. I think they've had Fubar, Watchpug, Cantina, all done on their existing code base, and we will have we will essentially by default we will have those as well. But we are going to be going out and getting our own audits done as well, just so that we're 100% confident in what we're putting out there.
Awesome. That is great to know. That's something I always like to ask. And I think that's awesome. You guys are using the HMX technology because from my understanding, they have implemented stuff you mentioned earlier, like the cross-margin collateral, multi-asset collateral, gasless trading and order management, and liquidity provider protection mechanisms, which it really is next generation technology for this kind of a platform. Like, this is cutting edge stuff, and we are on the forefront of these trading platforms, especially in the derivatives industry, because DeFi derivatives trading and platforms is evolving super fast. It's a technology that is every year getting crazier and crazier because this isn't like traditional finance. And I talk about this a lot on my channel in my interviews with other founders. Options trading, derivatives trading, perpetuals trading, futures, whatever you want to call it. It's not the same like traditional finance. We have MEV bots out here that are always trying to find that value to extract from everything going on, much more so than in traditional finance. And it really changes the game. So it's this perfect unison of like PhD level econ and PhD level computer science merging to create an incredible new cutting edge technology and a space for creativity, development, and breakthroughs like we've never seen before. So much of this stuff is so cool, and it's really revolutionizing trading as we've known it over many decades. This is an all new stuff, and it allows you to do things that you really can't do in traditional finance, at least not easily, especially not as a retail trader, especially not as an un-KYC'd retail trader who can just come on here as long as it's legal in your jurisdiction. Obviously, disclaimer, know your laws and everything where you're from. Make sure you're allowed to use platforms like this and everything. But if you are, you can do like 1000x leveraged trades. And if you're like super confident in a play, I mean, you could get some really incredible upside. Or, with 1000x leverage, you could also get completely wiped out if you don't know what you're doing. But, do your own research, and diversify and all that stuff. Not financial advice, but having stuff like cross-margin collateral or multi-asset collateral is kind of a game changer in my eyes. Can you explain what cross-margin collateral or multi-asset collateral is?
Yeah, well, first of all, multi-asset collateral means that there are several assets that you can deposit as collateral on the platform. So you're not just limited to one asset. So some of the other popular perps you will only be able to provide collateral with a stable coin, for example, or you will only be able to trade collateral with Ethereum. Whereas we will have, certainly to begin with, there'll be USDC, there'll be ETH. We're currently waiting for Coinbase's wrapped Bitcoin to launch to be able to use that as collateral in the platform. So that's the multi-asset collateral. And then the cross-margin collateral means that you can deposit a certain amount of assets into your account, and that will be used for whatever position. So you could open an ETH USD long, you could open a Bitcoin USD short, and it's going to use the same margin for the backing of those trades. So you don't have to have specific collateral for each individual trade that you put on. So it's just a much easier process for a trader.
That's amazing, really. It makes the thought process here as a trader so much more seamless. Because if I've got a $20,000 portfolio in Bitcoin, ETH, and stable coins, and I could just provide those as my collateral, and then essentially the platform is smart enough to know I've got essentially $20,000 in assets to for margin and for my collateral here to trade on, and I don't have to worry about like swapping this or that, which is better for in some jurisdictions for tax reasons. If I don't have to sell my Bitcoin and I can just use it as collateral here to make trades across other assets and things like that, that might save me on a tax implication or a taxable event. Do your own research, talk to your accountant and lawyer and everything like that. I'm just some guy on YouTube, but I could see how that would be very beneficial for some of us who like to hodl our Bitcoin, but also want to play around and use it as collateral to do more stuff. Yeah, there are so many different aspects to that I think are wonderful. Now, granted, if you use 1000x leverage, you guys, be careful because your collateral is at risk there. But also, if somebody makes a trade at 1000x leverage, let's just say hypothetically, like if you know what you're doing, or somebody's a gambler and they just get lucky with 1000x leverage, they could have, a gain of incredible amounts of money, right? Like they could turn $1,000 into potentially 6-7 figures with the right trade on that, and then the risk starts falling over to the liquidity providers to be able to take the brunt of that trade as liquidity is leaving the platform to make good on that deal for the trader. So one thing I notice here in the HMX technology is robust liquidity provider protection mechanisms. So say YaBonks here, myself, I am just the luckiest man alive, and I make a YOLO trade with 1000x leverage. I'm like, Bitcoin's going to 70K overnight. I'm going long on it with $10,000, 1000x leverage. All of a sudden, let's say it goes up 10, 20% over a week or something, Bitcoin does. And let's just hypothetical, I don't know the numbers, I'm just making stuff up. But let's say my $10,000 trade is now worth, I don't know, $1 million. Okay, something crazy on 1000x leverage. And I cash out. Could something like that, now that's, I know, kind of smaller numbers, but let's say somebody tries to cash out of like $1 million position all at once, a huge trade like that. Could that wreck the platform? Could that wreck the liquidity providers who are providing that liquidity? What is stopping that or protecting those liquidity providers?
Yeah, great question. And just to clarify on the leverage side of things, so there is the pitch deck there says up to 1000x. And that ultimately is the goal, but that won't be you won't be able to do 1000x on every single asset that's on the platform. So typically that will be reserved for foreign exchange trades. You'll be able to use higher amounts of leverage on foreign exchange.
That makes sense.
And the crypto assets will be probably 50 to 100x, depending on what, which is still, I mean, 100x is more than anyone should really need in terms of leverage.
I agree.
But we will gradually scale the amount of leverage that is available based on the depth of the market making liquidity pool, because it is something that we need to manage closely in order not to put the ecosystem at risk, or the liquidity providers at risk. But part of the design of the platform and what we've inherited from HMX is this risk management setup that you see on the screen here. So these are 7 different mechanisms that have been put in place specifically to make sure that what you've just described doesn't happen. So for a start, you've got a max utilization limit. So that means that if too much of the LP is being used at any one time, it'll mean that people can't then open new positions because it's at max utilization. Similar to how a normal lending and borrowing market works, where you get to this point where you've got this max utilization, you simply can't borrow anymore. Because ultimately, when you put on a leverage trade, you're borrowing from the platform to give you that leverage. So
the FTX platform, Sam Bankman-Fried or whatever, if he had max utilization limits on his lending and stuff, maybe they wouldn't have gone insolvent and wrecked so many people. So I think max utilization limits for the entire ecosystem, preventing people from opening new positions when there isn't enough liquidity available at that moment in time, is very smart. And I wish other financial establishments utilize certain things instead of leveraging themselves to the hilt, potentially on assets that don't even exist. Anyway, I'll get off my high horse on that whole situation, but that's really cool.
Yeah, so you've got that max utilization limit, and yeah, absolutely. If maybe certain platforms had been more responsible with how they manage things, we wouldn't have ended up in certain messes. But you've then got the auto deleverage and the profit reserve buffer, which kind of work hand in hand, and that ultimately means that even if the max utilization limit hasn't been met, but someone gets a really great trade, and that's going to start putting pressure on the LP, then we will start automatically, de-risking that position, and we will start with the traders that are in the most amount of profit. We will start closing some of their trades first, in order to protect the whole ecosystem.
Yes,
and then we're continuously monitoring open interest levels to make sure that they are relatively in balance, because that's what we want. That's where it's healthy as a platform, if you've got a balance between longs and shorts on the platform. And then so we implement velocity-based funding rates. So essentially that will adjust. If you're long, you may be being paid a funding rate depending on where the price is in relation to the underlying asset. So this will automatically help balance the books, if you like.
Yeah, and I read through your documentation on all of this stuff, and it is fascinating technology here that is in place that, behind the scenes in a lot of centralized trading platforms, most of this stuff is very manual, where they have to come in, and if they see something go wrong, they might pull the plug or just shut things down. I think Robinhood, for stocks, they ran into this issue with I think it was GameStop stock trading, where they didn't have automated protection mechanisms in place, and they had to literally turn off the buy button manually. And this wasn't really documented well that they could even do this. So people were caught off guard. But you guys you're very transparent. You have all of the mathematics here, the conditions in which this stuff happens. So you can know if you're in like the craziest trade ever and you're up 1,000,000%, that they might just cash you out at some point. And it's part of the terms of service. It's documented, and you will know that this is happening because infinite money can't just be printed out of nowhere, especially when you've got crazy amounts of leverage. But still, if you're making a trade like that, you're going to be real happy. I guarantee it. But yeah, it's imperative to protect the entire ecosystem here. And I love that you guys are transparent about this. I wish traditional finance platforms were more transparent about how they operate and what mechanisms they use internally to manage their trades, because people oftentimes don't understand what's going on when things like this are in place, or why are longs or shorts, why do they maybe cost a little different, like the fees might be a little higher or lower for some of them to incentivize that open interest to keep a more healthy trading environment. I think that's very, very clever. So yeah, the HMX technology in place here, I think you guys made a great selection for a decentralized perpetuals platform using HMX's next generation technology.
Yeah, I mean, our CEO, Bill, he is a trader. That's his passion is trading, and so building this platform and launching on the base chain, his platform of choice at the moment for his own trades is HMX. I think last week Bill did about 70% of HMX's total volume himself. So he trades huge 70%.
Wow.
he trades huge amounts of volume. And so ultimately what we're doing is we're building the type of platform that traders want, because it's built by traders. So all the features that a trader is looking for, whether it's advanced order types, implementing things like trailing stops and automatically switching your position from long to short. These are all things that are on our roadmap to implement, because we're led by a trader.
That's incredible.
And to build on that as well. So it's not just even traders that might want to use a perp dex. So I do a lot of providing liquidity and concentrated liquidity pools. And there'll be oftentimes where I want to try and hedge some of my risk off, or the downside risk in a concentrated liquidity pool. And I will use a perpetuals exchange to limit my exposure in an efficient way. So liquidity providers, as well as investing in our LPs, can use a perpetuals exchange as a way to hedge some of their risk as well. So there's a huge market for this stuff, and we're in our roadmap, and it's not in the documentation yet, but we're going to be looking at ways that we can make things like hedges for liquidity positions. We're going to build tools in the platform that allow users to be able to do that with a couple of clicks of a button, rather than having to try and math it out in their heads or on a spreadsheet.
Yeah. Yeah, that's amazing. Some of the other tools that I saw in here, you guys have gasless trading, and also one-click trading, and even setting your stop losses or other trading tools like that on the chart itself. So will this be available in the test net for people who will be participating in like the demo trading competition? Will they be able to set their stop loss just by clicking somewhere on the chart and setting it that way? Or are they going to have to try to calculate it all out?
Yeah, no, absolutely. So they'll be able to do that. Everything, all of those features will be there on the testnet. So the way it works is you will create a PIN code essentially when you log in, and you'll sign that PIN code with your wallet,
Mm.
and then you'll deposit a certain amount that covers any gas that you would normally have to pay on every single transaction. And so the gas is done for you through the technology that we're using, which means that you can adjust your stop losses. You can drag and drop your stop loss or your take profit on the chart itself, and you don't have to sign a transaction every time that you do that. You just pop in your PIN code because of this gasless trading environment.
That is awesome. So you'll be able to set up a PIN code, and then you don't have to sign every transaction or use gas for every action that you do, every approval, all those things. That's going to be super convenient. So it'll give you essentially what feels like a centralized exchange trading platform experience, but in a decentralized manner where you will still have custody of your assets yourself in your wallet. Is that right?
Correct. Yeah.
That's amazing. That is extremely cool. Wow. So yeah, this platform, the documentation is amazing. The one-click and on-chart trading technology, account management, algorithmic trading. So you guys are going to have all sorts of different trading instruments, like you said. Will you guys be able to do? Will you guys like in the future provide like bot trading? Like I know there's some like price trading bots and things like that, or you could set up different strategies on some other trading platforms with like grid bots and things like that.
Yeah.
Is that in the roadmap as well?
Yeah, it's actually that's going to be available from day one. So
Wow.
we're releasing our APIs essentially. So if you've got the experience to be able to make the APIs talk to your algorithmic trading bot, then you can run your bot on our platform. And we're already in discussion with a couple of projects that are out there at the moment that are developing, the next generation of AI bots, and potentially making a partnership with them. And they're actually going to be testing our testnet as soon as it launches, because they're really interested in doing something on the base chain. So the opportunities are out there for anyone that has that level of experience and the technological know-how in terms of being able to use those algos on the platform. And we're obviously going to make that as user-friendly as we possibly can, because again, it just brings more volume to the platform, and we want volume. We want as much volume as we can get.
I love it. So for all of my quants out there who are writing automated trading bots in Python, they're going to have a Python SDK API. You can write all your own bots on here using all of this advanced technology, and you're not going to be front run like in traditional finance on their platforms that, they're feet away. Their servers are feet away from the actual brokerage houses and trading servers. So they always have that advantage here. You're going to have the opportunity, because it's decentralized finance, to trade yourself. And obviously, you can get really advanced if you're more than just a quant and you're also a developer or hacker in the blockchain tech space. If you know how to make MEV bots and things like that using nodes and mempool information, you could probably tie that in to your Python SDK to get the most up-to-date information on what's happening with open active trades. So all you genius computer science folks out there, I'm a computer scientist. That's what I went to school for. I'm a software engineer. This stuff is the most fascinating stuff to me. And I can't wait to see all the cool things that people come up with to try to make a whole bunch of money in these trading platforms, and watching this arms race essentially of developers trying to out trade each other with AI technology or using different indicators in different ways, using MEVBot technologies, looking in mempools and try to get the most up-to-date information with like Chainlink oracles and things like that. Speaking of Chainlink oracles, I do believe you guys are using Chainlink oracles and some other vendors and technologies to provide protection against different kind of essentially MEVBot attacks like flash loans and things like that, or price manipulation. Could you explain a little bit about those protection measures?
Yeah, so we're going to be powered by Pith is going to be our main Oracle provider. We will also be integrating Chainlink as well as a redundancy measure or a backup, if you like. But Pith will be our number one choice for our oracles, and that's because they have the largest amount of experience with perpetuals exchanges. So they essentially power the largest perpetuals exchanges that are available in decentralized finance. And so they've got the experience in providing that transparent pricing data that we require to be able to provide accurate pricing, even during times of extreme volatility to the traders on our platform.
Awesome. That is great. So this is something I love to see, especially for a trading platform or exchange. Things like this, where you're getting accurate, up-to-date, multi-source pricing data from multiple sources that can't be manipulated. So that's going to provide a lot of protection for people who are trading in real time, as well as protection for liquidity providers. So while we're on this topic, what do you think is the biggest risk to, let's say, let's start with traders here. What do you think is the biggest risk to traders using the platform, in your opinion?
Probably themselves.
Yes, good answer.
And using too much leverage. We have dedicated AWS servers that we are using to make sure that we have 100% uptime capability. We're using Pith oracles. We'll have a backup with Chainlink, so that if something happens to Pith, then we can quickly move into Chainlink, and that there's no disruption or interruption with the price feeds. So the risk to traders, I think, is small. I guess if there was an issue with base chain, that could potentially provide a bit of a risk where people aren't able to actually operate or interact with their trades because the base network goes down.
Yeah, that's a risk, we all take it in any blockchain network. If there is any kind of slowdown or traffic congestion, maintenance, or, exploits or things, this is all new stuff, you guys. I mean, it's only been around for 10, 15 years. So this is the wild, wild west, and Base is a newer chain, but one of the fastest growing ones, and also one of the most well-backed chains in existence. So I think it's I personally think it's a great opportunity, because it's very well positioned at this point in time for the fast growth of the Base chain. So I love your answer. The biggest risk to traders, in your opinion, are the traders themselves. I can personally attest to that as somebody who has, over the last 15 years of trading in stocks and then options and then crypto. Yeah, the biggest risk was myself and trading emotionally, FOMO, not knowing what could happen with the markets. So
revenge trading.
Revenge trading. I'll make it back this time. I'll make twice as much. I'll make it back. Oh, it's gone. I love it. So be careful out there, you guys. If you're trading, be smart, be disciplined, take the emotion out of it. Not financial advice. I'm just, like I said, some guy on YouTube, but careful out there. Be methodical. Do your research. Now, my next question: what do you think is potentially the biggest risk for liquidity providers who, like myself, who would like to just kind of provide some liquidity and set it and forget it for a while? What's my biggest risk in your opinion?
Well, the market making LP, which is essentially the counterparty, as you've explained already, the market making LP is the counterparty to the traders. So the market making LP is made up of, when you deposit into this LP, you're essentially getting a combination of USDC, ETH, and BTC. So you're holding those underlying assets.
Yes.
So your position, the value of your position, will fluctuate based on the price of ETH and BTC. So if those assets are dropping in price, then the value of your position is also going to drop in value as well. And on top of that, there is the fact there's the counterparty risk. So if traders, overall are profitable, then that will have a negative impact on the price of the market making LP. So there is that counterparty risk to the trader's performance in that MMLP. Typically, though, what history shows us is that more often than not, most traders don't actually make any money. They're net negative in their P&L.
Yeah.
And so from my personal investments, I'm in quite a lot of these similar MMLP type pools, because you're essentially betting against the retail traders, and your position goes up in value if they lose. But there is the risk that traders go on a winning streak, and that may have a short-term impact on the value of your LP. There are also black swan events, and we've got these those 7 LP protection mechanisms that we discussed earlier on. But in a black swan event where networks go down, then again there's risk there.
Absolutely. I think you elaborated the risks of LP providers very well here, especially the unique aspect of the counterparty trading risk. If they go on a winning streak or have some grand slam out of the park, there is some effect there on the position. But overall, like you said, most traders tend towards breaking even or losing money. There's a very, very small percent, statistically speaking, of traders that are profitable. So if they are one of those few who just has the gift, if you will, they're very unique and rare. So great information there, really. I love providing liquidity as well. And I also love trading, but trading is more of a high octane, high adrenaline type thing for me. And that often causes me to trade poorly and break even usually. And then I just spent all this time and adrenaline and cortisol stressing me out to break even essentially. Whereas with liquidity providing, I can put my money to work for me. I can lend it to people that I find high trustworthy value in, platforms that I trust, with teams that I can see and they have reputations to protect and everything. And the contracts are known and vetted and have been used for years on other platforms potentially as well. Those are the positions I like to take, and I like to provide liquidity, especially in like blue chip tokens. So if I provide my Bitcoin or Ethereum or stable coins or other blue chips as liquidity, I'm going to hold those tokens anyway in my portfolio. If I can lend them to somebody and make some extra money from it, I'm going to do it. And it's important that you know these risks that are involved as a liquidity provider, especially in like a black swan event. I love what you said earlier in the conversation, that you use Perpetuals platforms to take hedge positions at with much more capital efficiency to protect yourself from black swan events. So, for instance, having a short position on Bitcoin or something, even if you're long on the crypto market, and most of your like 90% of your portfolio is long on crypto blue chip assets like Bitcoin, you can open like a short or a put option or something on Bitcoin itself. And then that way, if your whole portfolio crashes because of a black swan event with the market, all of a sudden your little short that you had or your put option over here is worth enough value to offset a lot of the losses you would have taken. And not many people know about that kind of stuff unless you've been in the options markets for a long time. Yeah. So I think that was very clever and very wise about, what you said earlier. You don't hear a lot of people in the DeFi space. Funny enough, this is an advanced finance sector we're in. Not a lot of people know about stuff like that unless they've been out here a long time. They have experience. They know what they're doing. They have research. So that's how things like that I pick up on when you were speaking. I'm like, okay, Stu, he really knows his shit. Okay. Like in terms of finance, trading, providing liquidity, managing a portfolio, DeFi and crypto, you get a lot of fast talking whiz kids, NFT traders, hackers, rug pullers, people who are just script kiddies that fork people's contracts and do a fly by night kind of thing. And they might not actually know what they're talking about, but you could tell when you talk to somebody more experienced and seasoned out here who's been in finance or just in the markets a long time. They know what they're talking about. So this is very valuable information for you viewers who are listening. Take notes on all of this stuff. Okay. This could save you or make you a ton of money. Just this information for education purposes over the years to come as you play around in the markets and try to build up your financial portfolio. So, all right. Enough pontificating on my end. I got another question for you that's a little more fun than risk management. How about, what do you think is the best strategy out here for traders to make the most amount of money in Flex Perpetuals? So I'll ask you this same question for liquidity providers here in a little bit. But first off, if I'm a trader, Stu, you seem like you know what you're talking about. Not financial advice, obviously, but what would your favorite strategy be to make money in Flex Perpetuals as a trader?
That's a good question. So I would say the best way to make money would probably be to try and win our demo trading competition, because you're not actually risking anything.
Yeah.
And there's $5,000 up for grabs there. But for just in general sort of trading advice, and I'm not an expert trader by any manner of means. I did do a whole lot of time in the foreign exchange markets and had periods of great success, followed by periods where my emotions got the better of me, and I found myself doing things that were not written down on my trading plan, purely because I was revenge trading and stuff like that. So I would take my trading advice with a pinch of salt. You're better speaking to Bill, our CEO, and for anyone that is interested in trading, come join our Telegram, because Bill is in there literally every day sharing his charts, sharing his trades, and then sharing part of the profits that he makes from those as giveaways. But we're also going to be, we're really big on community, and education as well is really important to us. So we're going to be launching in partnership with Flex Perpetuals, under a different brand, because we've got Flex Labs, which is our overall brand. We're going to be doing an educational platform as well, that will be focusing on basic DeFi education, but also on trading specific education. And we'll be doing live streams and live rooms with trading, all to give people, a bit of the basic understanding of how to trade. But my advice to traders would be, take it easy with the leverage. I think long term and very, very short term is probably easier to see where the markets are going. It's that middle spot. You don't really know what price is going to do in the next 2-3 weeks, but we maybe have a better idea of where it might be going long term. And equally, if you're a day trader and you have a strategy that you have back tested and that you're confident in, then I think that day traders can do quite well in those short-term markets as well.
Okay, good information there. And now I'm going to ask you the same thing. What do you think is the best strategy to make money in Flex Perpetuals for liquidity providers, in your opinion?
So it's much more passive. The liquidity providing, and it's kind of that's where I like to operate in this space. So if you're in the MMLP, and that is made up of ETH, Bitcoin, and a stable coin to help navigate periods of extreme volatility, then your best bet is just to simply hold the LP. And there's going to be periods of time where the platform experiences much more volume. When the broader crypto market gets more volume, then our platform will get more volume as well. And it's during those periods where we've got lots of volume that you're really going to see the biggest returns on your investment. With providing liquidity, time in the market is so much more important than timing the market. You want to be in your position when the volume hits, because if you're not, you're going to miss out on an awful lot of potential returns.
I absolutely agree. And I've noticed that myself as a liquidity provider. The longer I leave a position there staked as LP somewhere, the better I end up doing. So, yeah, great information. Now, since we have this token generation event going on right now, this is more of a time-specific advice, or not financial advice, of course, but time-specific information. What do you think, in your opinion, would be the best way to make money with your token generation event that's going on at the current time?
So get involved in the TGE, and you can deposit as little as 0.05 ETH. Once we launch, those tokens will be made available to you. If you have ETH to pair, then pair it up with that FDX token that you're given, and then stake it on either our own platform or stake it on Aerodrome. In either of those two pools, you'll be earning a really, particularly at the beginning, you'll be earning a really competitive APR. And like we explained earlier, you have the ability to move from one to the other depending on where the APRs are highest. And you're not realizing any impermanent loss by doing that because you maintain the LP. So that would be my suggestion, and just allow our tokenomics to look after the price of the token, and allow our buybacks of the token, allow the revenue that we are directing towards supporting that token ultimately to help you earn more from those liquidity positions. That's what I'm doing.
Amazing. Yeah, that's probably what I will end up doing too. TGEs are one of the, in my opinion, if you get a solid token generation event or pre-sale or private sale, if you can get into those, are some of the best ways to make money out here. Like HMX, their private sale round, they did a 14x, and at one point we're up 20x even. So TGEs, your next best bet with something like that, and you don't have a crazy vesting schedule where you're sitting here waiting for years to get your tokens back. Well, a token potentially could go down in price. And this gives you the best option, I think, for playing how you want to play with the token. So a TGE, you get a heavy discount, you get way more tokens for your money. And then if you're planning to be a liquidity provider, you're getting a bunch of these tokens, pair it with your ETH, put it to work immediately on Aerodrome or on the FLP staking pool. and just start earning money on those tokens, or sell them immediately. I don't know, use your judgment, folks, for how you're going to play this. Make your own strategies. We're just coming up with different ideas for how to make money based on our experience, both of us being out here for years and years with multiple launches of different platforms and projects. And this launch could be a very big deal for Base Chain, because this could be the best perpetuals trading platform on all of Base Chain. Just this chart right here shows you why that is. You guys have some of the best technology that you're bringing to Base Chain for this kind of platform, right?
Yeah, the fees are, super competitive. Some of the lowest fees, trading fees that you're going to experience on Base. Plus, you've got on top of that, you've got the trade to earn incentives. So you'll get airdrops the more volume that you trade. And just in general, I think that Base Chain has a huge amount of growth for Perpetuals exchange. So, it can grow about 10x in order just to become the same size as Arbitrum for the Perpetuals exchange market. Mm-hmm. So there's about 50 million TVL on Base Chain at the moment in perps. And on Arbitrum, there's over 500 million. I think it's actually over 600 million at the moment currently. So there's a huge potential for growth for Base Chain Perpetuals exchanges. Yeah. And again, another reason why we chose Base Chain was because we feel that it's a market that we can do well in, because the competition isn't there yet. Right. And so we're coming with proven technology that has been proven to work already on HMX. And even though HMX is, as we've said, relatively mid to small size Perpetuals exchange, they consistently find themselves in the top 5 in terms of trading volume because traders like their platform. And so, we expect something similar to happen with Flex Perpetuals. And that opens the door for all those juicy returns that early HMX investors were able to realize. That opens the door for early investors in Flex Perpetuals to achieve something similar. For TGE investors to get a return on their investment within the first few months, and then to be able to hold those tokens for price appreciation. And obviously, we can't guarantee anything. I'm not here saying you're going to earn 50% APR or 70% APR. It's based on the volume that the platform gets. But with all things being considered, when you're investing in an early protocol, there's always a risk there, but we're mitigating a lot of those risks because of the fact we're using tech that's proven, because of the fact that we're launching on a platform that's hot, and it's backed by, it's not a platform, a network that's hot, backed by Coinbase, which are huge. They're investing lots of money to make Base Chain as competitive as possible. So I think the risks are lower, and all your tokens are liquid from day one. So you can get out if you need to.
Yeah, I love that. So get your tokens day one. You can, if you just want to bail and take potentially quick gains from that, you can. Or if you want to put them to work and go for more price appreciation over time, if you think that's going to happen, as well as earn revenue share here from all the fees and everything else that's involved. I think that's either would be great strategies. It all depends on your own personal risk tolerance levels and your own risk reward profile that you put together for this opportunity. Make your own strategies, come up with your own ideas, and make sure to be accountable for your actions and diversify, do all that good stuff, like I always say. So I that basically covers everything. I mean, we could dive into every little bit of this for hours, like all the different tokens and stuff, but it's pretty straightforward based on what we've talked about. And if people want to learn those more nuanced technical features for each of the different tokens, like FDX, FLP, escrow, FDX, FP, and FTC Flex trade credits, you can look into how all that works and how those emissions are doled out for each of those assets. But I basically think we're good for right now. I have one more question I want to ask you. Where do you see Flex Perpetuals, the platform, in the next 6 to 12 months?
So I think that our goals are user adoption and depth of liquidity. So if a year from now, if we can have 3 million in liquidity on our native token, I think that's a really great foundation for us to have, and that's much stronger than lots of our competitors in terms of the liquidity on their underlying token. And if we can meet 40 to 50 billion in trading volume over the course of the first 12 months, I think we're in a really strong position to capture our slice of that particular market and to create a name for ourselves. So, we're not doing price predictions on our token. We're looking for depth of liquidity and volume on the platform. These are the metrics that we will be measuring success with.
Yeah, I totally agree. For a platform like this, those are what you're looking for. And I think you're well positioned to do so, in my opinion. So that's I think good for that portion of the discussion. I would now like to ask you, where can people find Flex Perpetuals? How do we get there? How do we get information about it? How do we start trading with the demo competition? And also, how do we participate in the token generation event?
Yeah, cool. So our website is flex.trade. So it's really easy to remember. That's, if you can remember anything, just go to flex.trade and you'll be able to find the links for everything else on there. So that will have and it's at the moment it's just a holding page until the platform goes live. But you'll be able to get access to our Telegram group there. You'll be able to access our Twitter, our Medium account, along with the big button that says deposit now for our TGE. So if you want to get involved in the TGE, click that button, you'll deposit into the contract. You will get an allocation of our TGE token. And then once the TGE raise is complete, then you will get allocated your FDX proportional to your deposit amount in the raise.
Awesome. So flex.trade, that's the easiest URL to remember I think I've ever heard. Flex.trade. Go check it out. If you guys are interested in that TGE token generation event, you can find it there. And I will put the links to all of that, including the links to their Telegram and Twitter/X account in the description of this video. I'll also make a channel in the YaBonks Discord server. So discord.gg/YaBonks. Go in there under projects. I will make a channel called Flex Perpetuals. It's an open forum. If you guys have any questions, feel free to DM me, ask me, or ask them in that channel or in their Telegram channel. And Stu, where can people find you? If they want to follow you and all of your DeFi shenanigans over the years, how can they do that?
Yeah, so I have a YouTube channel, although I don't do a huge amount on that these days. I'm so busy with Flex. So you can find me on YouTube, Crypto Stu. I'm on Telegram, Crypto Stu. I'm on Discord, Crypto Stu. And I'll make sure that I'm in your community. And if your community has questions and they're asking questions in your channel, I'll just tag me. And then I'll make sure that I'll be notified. And come and join us in Telegram, because I hang out in Telegram much more than I do in Discord. So if you've got questions, I'm in there. I'm in our group every single day. Just hit me up.
Amazing. All right, everybody. Thank you for watching. Make sure to like the video, subscribe to the channel, hit the notification bell. Crypto Stu, thank you so much for coming on my channel and sharing all of your wisdom about DeFi and trading and liquidity providing and telling us all about Flex Perpetuals.
Thanks for having me. And, maybe we'll be able to do this again and we can bring some of the rest of the team on the next time as well if they're available. Yeah, looking forward to the journey ahead.
I would love that. Thank you so much, Stu. And thank you everybody for watching. I'll see you on the next one. See ya.